On the 11th of January, the Securities and Exchange Commission, the SEC, or the body that governs financial markets in the USA, made a historical decision to approve 11 new Bitcoin spot ETFs. Now you might be wondering, what on earth is an ETF? It really sounds like some sort of an energy company. Not quite. ETF stands for Exchange Traded Fund, and it's an easier way to gain access to certain asset classes such as commodities, gold, silver, or even stocks without having to buy individual stocks or individual assets themselves. So with an ETF, for example, you can invest in a group of companies, a group of stocks through one single ETF. So it essentially gives you access to a broad group of assets. For example, there's something called the SPDR, which is the S&P 500 ETF, and it's essentially an ETF on the 500 largest companies in the US. So if you bought into the SPDR ETF, you essentially own shares of every single one of those 500 companies. Quite nice, right? ETFs tend to trade like stocks, so you can trade them all through the day, whereas with mutual funds, they are tradable at certain times of the day. So why a Bitcoin ETF? There are quite a number of people out there who are still very skeptical and scared of cryptocurrencies, and I would say rightly so. These individuals would much rather invest in this highly volatile and highly unpredictable asset class through a regulated entity or a financial company they can trust. And that precisely is one of the benefits a Bitcoin ETF provides. It also gives more and more people access to this non-security asset class. And it's also created the possibility of more ETFs in the future on cryptocurrencies. Now, this ETF move is major. Bitcoin has essentially made a transition from being an idea to being a white paper, to being an asset class, and then to being a joke, where some of the largest financial institutions in the world swore they would never touch it, to now issuing research on it and trading in it. Bitcoin has had quite the journey. Now, I've been invested in Bitcoin since 2016. Back then, things were a little bit hazy. There were a few companies trading in Bitcoin, but it wasn't ubiquitously available as it is today. And I invested in it through a fund. Best decision I ever made. Unfortunately, that particular fund is closed to retail investors, given the increased oversight from regulatory bodies like the FCA and the SEC. Now, the question is, would I actually buy this Bitcoin ETF? Well, this ETF is essentially a spot ETF, and what that means is that the companies that have been authorized to issue these ETFs actually own the underlying assets. They own Bitcoin and store it with safe custodians. That's a good thing. However, by buying these ETFs, you will essentially be paying an annual expense fee, and the justification for that is that these regulated firms incur costs in terms of administrative requirements around storing Bitcoin and essentially trading it. Now, Cathie Wood, who I do respect tremendously, has a Bitcoin ETF. And it's called ARK-B. It was done in collaboration with 21 Shares. And under the Why Us section of the fact sheet, they state 4 reasons for wanting to trade Bitcoin through this fund. Number 1, it's a tool for diversification. Can't argue with that. Number 2, it gives exposure without complexity. Again, that's a very salient point because you are essentially getting regulated access to one of the most volatile asset classes out there. Number 3, growth potential. I can't argue with that as well because Bitcoin has seen a massive ballooning in terms of its market capitalization. And number 4, it says regulated exposure to Bitcoin, which I suppose is kind of similar to the second point of exposure without complexity. Now, all of these are really great points, but the thing is, I already have access to all of these advantages and I don't have to pay an annual expense ratio to any company for it. And this is because I actually store my cryptocurrencies in a physical wallet in one of these. And it really means that I don't have to pay any company's annual custody fees to look after my Bitcoins for me. I can also get access to it and trade it anytime I wish. So to answer the question, will I be buying a Bitcoin ETF? Personally, at this point, I would say no. And that is because the value of getting access to Bitcoins versus the cost of it through these ETFs just don't make sense for me. However, that is my personal situation. Given the explanation I made before, I already have access and safeguarding to Bitcoin through my wallet. I also have my position within the fund. So I already have the benefits, if you will, that these ETFs provide. And I just don't want to be paying an annual fee for someone else to manage my cryptocurrencies. However, if you are a brand new investor into the crypto space, or maybe you've been a bit apprehensive in the past, this could be a fantastic and a great way to gain access through a regulated entity. And as you get more confidence in the journey and you start to understand cryptocurrencies a little bit more, you can actually diversify your access to these non-security assets in various other ways. And in my estimation, the blockchain will only get bigger, and I believe the tokenization of the world is where we're headed, where every asset class is accessible through a token. Real estate, stocks, physical assets, etc. And this is why, for those of us who are very serious about building our financial futures, we must be aware of the evolution of financial markets. And that's because we don't want to miss out on these potential once-in-a-lifetime opportunities to create wealth that can be life-changing.